Thank you, everybody. Thank you. Thank you. Good evening, Mr. Reel.
Radio Free Mormon. I hope you've had a great week.
Oh, absolutely fantastic. I'm as excited as a person can be and still be in the body.
Awesome. Well, in the body or out of the body, I cannot tell.
I can tell, though. That's the difference between me, you, and Paul.
You must have shaken someone's hands and there was something there.
Well, it's so exciting because tonight's show is called LDS Church's Stock Portfolio Under Scrutiny again. This is new stuff that's happening, and that's being reported by those watchdogs of the church finances, the Widow's Mite Report. By the way, Bill, before I just jump into things, how are you doing? Do you want to say anything to the audience? Any announcements that you have to make?
No, life is good. And I put something on Facebook yesterday, but this isn't the place to get into that. So you know what that is. And otherwise, folks can go to my Facebook page and check that out. But otherwise, things are great. The nonprofit seems to be doing pretty well. And I think we're putting out a ton of content right now. And I think great content for that matter.
Yeah, and tomorrow night, I'll be putting up something at Radio Free Mormon. Mind-blowing, but that's tomorrow. The mind-blowing for tonight must stay tonight. I got to think about the game. So we're talking about the church finances, and there's something that's been going on with church finances and a special investigation that's been ongoing with the Widow's Mite Report. I actually knew about it, prior to the news breaking, which really broke when Widow's Mite put this newest report up on their website. I think it's been a few weeks ago now. And then it got hold of by the Salt Lake Tribune, I think, who ran a story about it as well. But on April 15th of this year, I was in London. I was on my way to see the Book of Mormon musical on that Monday evening. And I ran into two blokes who looked familiar. So we had dinner with them, and they are Peter Bleakley and Nemo the Mormon. And Nemo shot a little bit of video footage. We're just going to play 2.5 minutes of it. Remember, this is April 15th. This is before the Widow's Mite Report went up and before the Salt Lake Tribune. Grab the story. 2.5 minutes with me, Nemo, and Peter Bleakley in a nice little restaurant in London.
Yeah. No, that it won't fall. I think it won't be able to get away with it as much anymore because it's more and more becoming public, and people are seeing it. And we've got the great people at the Widow's Mite Project who are investigating and exposing this. There's a report that's coming out soon that says that not only I've been reviewing it a bit. Once again, my association with the Widow's Mite is only to review stuff and make sure it's simple enough for somebody as uneducated in finance as I am can understand it. The layperson can understand it. But yeah, there's apparently not just a 13F. Apparently there's a 13G.
Ooh, whatever that means.
This isn't going to go up right away. It won't go up before. It should be the next few days that this goes up. And 13G says that, of course, 13F says that if you have more than $100 million invested in the U.S. stock market, that you have to file the 13F. 13G is like it, but different. It says if you own more than 5% of any single company,
you have to declare it.
You have to report that. And the church has run afoul of that on a number of occasions too.
Okay.
And it wasn't addressed in the order from the SEC, so it probably was not investigated or seen. But now that it's coming out, who knows? It may. I don't think the IRS is that for the church.
Okay. Well, there we go. Well, exciting.
Because I think it's going to come out, having heard from some people who are well placed to know, is that the church actually was involved in all this 13F stuff for more reasons than just keeping the members in the dark about the total assets the church has.
We can probably stop right here, Bill, because I think that's where I've talked about everything related to what we have our special guest on tonight for. And once again, it's Spencer Anderson, professor of accounting from Indiana University. Spencer, how are you doing?
Doing great. How are you both doing tonight?
I'm fine. Yes. I think Bill said he's okay. Yeah. He's
RFM, you kind of
nodding his head. Yes. He's okay.
Yeah.
He's fine. He's fine. So what we wanted to do was to bring you on to go through this Widow's Mite report that did go up after April 15th. And so we can talk about, with your expertise, what it is that's in there and what it is that the church has been doing wrong this time.
Yeah. I mean, you did a great job summarizing it.
Yes, I'm sorry. Go ahead, Professor.
No, you did a great job summarizing it to Peter and Nemo, both great people too.
Thank you. That was impromptu.
That was great.
All right. Well, let's go ahead. Let's put the Widow's Mite report up there. Once again, this is the most recent report. I don't think there's one more recent than this. This is about Ensign Peak 13G. Can you take us through this, Spencer, and explain to us what's going on here with this 13G and the church?
Yeah, so I mean, it's first of all, let me just say that it is so weird to know that there's like this small subset of the population that knows what a 13F is, that has nothing to do with their interest in finances or securities law. It's just really weird, kind of the stuff that you get to know when you like get into Mormonism and Mormonism's sort of seedy underbelly. And I bet that there's just a lot of people that like know 13Fs and what SEC orders are, enforcement orders are, and what the process is behind that, and what the thresholds are for now 13Gs. And
Mm-hmm.
it's really odd, kind of the knowledge that we get to gain. And I think you and I were talking about this. Like now you get to know some bits about Egyptology, and you learn a little bit about archaeology and genetic drift and all of these things that come into your life just because you're involved with the Mormon Church.
Right. Everything I know about the SEC, I learned from Mormonism.
Yeah. Yeah. And there's just like this random sprinkling of people out there. The SEC would just be shocked if the random person just knew about 13S, but there are a lot of us out there now. So
there are
this is great.
thousands of us now, and right now there are 245 of them watching live.
All right, this is great. Well, so let's just get to it then. The 13G rule, as you said, RFM, is the 5% rule. So if you own more than 5% of one individual SEC registered company, then you have to file a 13G report or a 13D report. We'll talk a little bit about that in a minute. But
by the way, I'm already interrupting with a question. When you say an SEC registered company, that means one that's on the U.S. stock market, right?
Correct. Yep. That's on some stock exchange within the U.S. Yeah. And so the church specifically, if you own more than 5% of the stock, you become what's called a block holder. And at that point, you have to file this report to the SEC. We'll talk a little bit later about why that is. But basically, the church was required, if they had 5% or more of a specific stock, at the end of a calendar year, to report within 45 days of the end of the year, this report to the SEC. And then from there on, every time they made trades with that company, they would have to file quarterly filings as well. This is a big deal because if you own more than 5%, you potentially have influence. You're a beneficial. You have more benefits as an owner. Think about the fact that like most of the time, if you're a common shareholder, you have voting rights within the company. So if you have at least 5% of the votes, you do have a lot more sway at influencing the owners potentially, influencing the operating decisions of a company. And so it's really important for the market to see who the bigger players are when it comes to the ownership within the firm. The SEC takes this very seriously. And so this is different than the 13F. Same sort of reasoning is behind it to some extent. And as we all know, the church paid a fine for the 13F violation. We have no reason to believe that the 13G violations that were discovered here were ever reported, or that there was ever any fine associated with that by the SEC.
And we would have expected to see that in the SEC order, the 13G violations, if indeed it had been brought up or had been part of the investigation, wouldn't we?
I think so. I went back and looked at a lot of like SEC enforcement orders that had multiple violations for multiple regulations. And they were obviously the ones that I could see all included all violations were listed within the order. Of course, what I wasn't able to observe are any where the SEC didn't. That unobservable counterfactual is kind of there where I couldn't see whether the SEC ever didn't mention some violation. but it did look like most of the time to me there were a lot of instances where they did mention multiple violations. So
Yeah, and why would you not? They've conducted an investigation. If they found this out, either through confession or through their own investigation, they want to show their work. They want to put up there everything that they have found and make sure that this order, I would think that people on the other side, on the church's side, would want everything there in writing just for the benefit of knowing that it's all been covered. All the violations have been covered in this fine. So there's not something else out there lurking or another shoe waiting to drop.
absolutely. Yeah.
It also seems natural to me, Spencer, and I think we talked about this when we did the first set of SEC violations and them paying the fine, but it seems just really natural that the group that's doing all this regulation would ask the church, hey, is there anything else that we're not aware of that you would like to talk about right now that we can, if there's anything else that's been some sort of misstep? I can't imagine them going through this lengthy process, not once asking that. So if you put, again, two not certainties, a little bit of conjecture on both sides, but you put those two together, what you end up with is the church being likely asked the question and sort of not telling the truth, perhaps.
Your question reminds me of the question that I would get from priesthood leaders, where they would say, is there anything that has been unresolved that you'd like to clear up? And
Yeah.
just like me, the church said, no, of course not.
Of course not.
And I don't, whether that's the truth or not is another matter. Yeah.
Who could know?
Yeah. And we'll talk
I
a
would
little
say
bit about
maybe the SEC does not have the power of discernment.
yes, clearly. Another commonality across the two.
Yeah. Very good. Okay, I'm sorry. So interruption over for now. Please continue.
Well, I think we could go on to the next slide, I think, if that's okay. So we know about the 13F filing rule. I think most people know about that. I'll be very quick describing this, but the 13F filing rule was that if you own more than 100 million in assets in U.S. Common shares, then you need to provide on a quarterly basis the positions of all of those assets. So you have to list all of the stocks that you hold, how much you hold of each of them. And what the church did is they didn't want to reveal any of that information. And so they created 13 shell companies. And using those shell companies, they pretended to not be affiliated with the church. And those shell companies pretended to not be affiliated with each other, all in order to sort of make it seem as though the church didn't have these assets. It wasn't under the church's umbrella. And that was to hide the assets. And according to the head of Ensign Peak, Roger Clark, this was because they didn't want members to feel that they shouldn't pay their tithing, because members would feel like they don't need to pay their tithing if the church has $150 billion in assets. And the church got in trouble after a whistleblower came forward. The SEC conducted an investigation, found that they were supposed to have filed these all under one umbrella, under Ensign Peak, these 13F filings at a quarterly basis. And there were over 650,000 instances of essentially breaking federal law within these filings that were reported incorrectly.
Because it's 13 companies with multiple things they're supposed to report on over a period of about 20 years, right?
Yeah.
On a quarterly basis. Yes.
On a quarterly basis, yes.
Are you ready for the next slide?
Yeah, sure. Yeah, I'll be more assertive on that. So the difference between the 13F and the 13G, as we talked about, as you mentioned before, RFM in your video, is that this 13G is about one single stock. And if you own one single stock that you own more than 5%, you also have to file a 13G in addition to the 13F. And so for several companies that the church owned, they ended up finding themselves in this position where they should have filed a 13F. We already know they didn't do that properly. And they also should have filed a 13G. So we're going to get into that. So these are two separate, distinct rules. They are separate laws. They're different from, in terms of like, one doesn't substitute for the other, right? And that's what is important from this slide. So we can go to the next one. All right, so the first company in 2002, this was the first filing period in which Ensign Peak filed the 13F. Now, they didn't file it as Ensign Peak. They filed it as, what was the company? Whitney Asset Management Company.
Right. It was one of their shell companies.
Right. It was the first shell company back in 2002. And at that time, the church also owned more than 5% of a company called TC Pipelines. And Ensign Peak must have, this is what is really cool about Widow's Mite's investigation here, is you can sort of see with the data whether Ensign Peak knew that they were in violation of the law with looking at the pattern that's shown here. So they seem to have noticed that they were over the 5% trigger. And so in Q4 of 2002, they owned 6.5%. In Q1 of 2003, they owned 6.4%. And then they started really rapidly decreasing their stake to 5.13%. Now, in all of these quarters, they should have filed 13Gs, right? Because they're over the 5% threshold. And then in Q3 of 2003, they went down. They didn't go down by a lot. They went down just enough to be under that threshold. So they owned 4.999% of TC Pipelines.
It's like, could you be any more obvious?
And to be clear too, if you go under 5% in the quarter that you go back under 5%, you still have to file to basically say, now we're not a block holder. And so those were 4 instances of not having complied with the 13G requirement. But I think that this is really interesting because it shows that from the very beginning, from 2002, when they were first kind of looking at, how are we going to hide all of this? Their entire plan was designed to hide the size of the assets. And part of their scheme here was to avoid the 13G filing as well as the 13F filing.
So if I'm remembering this correctly, the Ensign Peak had been in existence for 5 years already, as
Correct.
of the point that Whitney filed its first 13F.
Correct.
And all of a sudden, they enter the stage after 5 years of no information. They enter the stage, or at least Whitney does, claiming to have 6.5% of the stock of one company. That's the TC Pipelines, right?
Mm-hmm, that's right.
So we've got no idea what their holdings in TC Pipelines were immediately before, the quarter before, though it would probably be over 5, or for 5 years before that with this company or any other company.
Correct. Yep. Or even before 1997. So just because Ensign Peak didn't exist doesn't mean that the church didn't own a significant portion of these companies. And also, and this is kind of important, is that it's likely that if you went back to the 1980s, the church was supposed to file 13Fs and 13Gs and was failing to file. So all that we know about is from around 2002 to 2019, the violations. But really, you could theoretically, I'm guessing, we would be able to go back if we had the data and say, actually, the church has been in violation of these laws for decades longer than that.
Interesting. Okay. So let's just go ahead and start. I can see the first violation being at the end of 2002, that quarter. That's the end of the year. They've got more than 5%. They should have reported there. The next quarter, they should have reported there because they had more than 5% before, the quarter before. And the same for what is it, the third quarter? No, it's the second quarter of 2003. And then finally, the third quarter of 2003, when they're down to 4.999, they should have reported there the first time they're under 5. So that's
right.
The 4 violations that we can track just based upon their own reporting.
In the 13Gs are public record. If somebody knows that you're trying to find it, you can go find it, correct?
Yep. Yes, you can go to sec.org. You look up the Edgar system. This might be more information that this is more random information that the public's going to find out. There's a system that the SEC has called the Edgar system, EDGAR. And you can look up public company and investor filings with the SEC. That's where you can look up financial statements of companies and things like that. They're all housed on this SEC website.
Is that
They're all
available?
there.
Do you have to pay for a subscription?
No,
Publicly
Everybody-
available.
everybody could go and look up the 13F filings for Whitney Asset Management in 2002 right now if they wanted to.
Cool. I'm sure some of our
So-
listeners will. We've got a proactive kind of audience.
And this is what's great about Widow's Mite too, is that everything's publicly available. So if you're a faithful member and you don't believe the numbers here, go ahead and verify them. Like, that's not a problem.
And then underneath that line there where you have the quarters where they should have filed, below that, there are some other things that are written in corresponding boxes below. Did you want to cover those? Do you think those are important?
Are you talking about the 13G?
Obligation? Yes, 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 yes. Those are the 4 violations that we just covered.
Yes.
And then no, because it's not a violation after the month after you've already
Correct.
gone below 5.
So once you've already gone below 5, those next 2 quarters, that's right, RFM. So those next 2 quarters after you've gone under 5, you no longer have to file the 13G. Now you still have to tell everybody how much you own of that company in your 13F if you
Right.
own more than 100 million of total stock, but you don't need to file a 13G.
And people, you mentioned this earlier, Spencer, but the church has $165 billion or so invested in the stock market. You pick whatever companies, if it wanted to, not that it does this, I'm not saying it goes this far, but let's just say it did, it has enough money to own more than 5% in 10 really big companies, right? It could pick 10 influential companies and own more than 5%. If it just went to the stock market one day and just said, we're going to dump all of it today, it would have, I don't want to say significant, but it would certainly have a statistically significant impact on the stock market itself.
Yeah, and so unrolling, there are, as far as I'm aware, there are laws that require, if you're going to offload that much, you have to do it in a staggered basis because of this issue, Bill.
Except when you have 13 shell companies, that's really one company, you sort of
Correct.
are splitting it up illegally anyway, giving the impression that you are, when in reality, it's one entity dumping all of it at once.
Exactly. And that's one of the reasons, Bill, you're mentioning, is that's one of the reasons the 13F exists, is to sort of make sure that those types of things wouldn't happen. And on the 13G side, you think about, like, if I owned enough to sort of influence the leadership of a company to lobby for certain legislation, or to cut down a certain supply chain, or to prioritize the benefits that come to me versus some other competitor, or there's just all these different things that you could do if you're an investor in a company and you have influence over that company. We need to know as a public what these players are, who these players are. And that's why the 13G is so important. You think about that. I mean, the church does have vested interest in what companies do out there. And I'm not accusing the church of trying to influence companies in any way, but they have the ability potentially to do so.
Yeah. And I'll only say, no, you don't have evidence that they've influenced companies that they own investments in, but we've certainly seen the church use its influence in lobbying power with Utah politicians, for instance. So it's not outside the realm of the LDS Church to try to get what it wants by rubbing elbows with people that it has some sort of influence with.
Sure. Yeah. Yep.
All right. Moving on.
So now we'll go to another 13G obligation of JDN Realty. Okay, so this was again in the Q4 of 2002. JDN was acquired in March of 2003, a month after their filing deadline. And the fact that JDN had agreed to be acquired, let's kind of go back here for a second. So Q4 of 2002, they owned 6.1% of JDN Realty. And usually you have to file within 45 days of the end of the year. So the end of the year comes, Q4 of 2002 comes, the church owns more than 5%. That means that by the end, by like March 1st, or March 30th or March 15th or something, 45 days, I guess. Let's see, February. Thank you.
I think it'd be
The middle,
Valentine's Day.
yeah, around Valentine's Day, they have to submit the 13G for JDN Realty. Now, what's weird about this situation is that in Q1 of 2003, JDN got acquired by someone else. So the church lost its 5% ownership, or at least it might have become a private company or something like that. I don't know the specifics on that, but it became acquired. And so at that point going forward, the church no longer had an obligation, but that doesn't absolve it from the obligation to file in Q4 of 2002 when they did have over 5%. And so this is another example of a failure to file. Could I have made that any more clear? Probably a lot.
It's
I understand.
lucid to me.
All right. Okay. All right. So there's the next one. Yeah, let's go to the next one. And then, so after that, they started to become a lot more careful. And so after that, in 2003, after it created Whitney Asset Management, that first shell company, you could see that it started kind of scheming in a way that like it was prepared to like avoid this going forward. It sold a lot of its shares of TC Pipelines to get under the 5%. That's what they started to do. They never hit that 5% threshold. There were a couple of exceptions to that we'll see in just a little bit.
And you mean they never hit it again?
They never hit it again. They
Right.
never hit the 5% threshold again going forward until Widows Might discovered at the end of 2009 that there was another. Yeah. And this one was an accident. And this is kind of maybe the fault. Maybe this is something that they didn't think about. If you're just under that 5% threshold, then you're not always in control of whether you go above the 5% threshold. And this is a perfect example of that. So Ensign Peak owned 182,000 shares of Utah Medical Products. It's a company from 2007 to 2009. And in 2007, that represented 4.6% of all of the shares, all the outstanding shares of the company.
Sounds like an essential oils company.
I don't know what it is, honestly. But so a company can repurchase their own shares. And what happens when that creates treasury stock? What that means is that if you're trying to figure out your relative ownership, the denominator in that equation gets smaller. And that means that your relative ownership gets bigger without you having done anything, right? And so the church didn't need to buy or sell anything, but because Utah Medical Products bought a bunch of their own stock, the church went from 4.6 ownership of outstanding shares in the market to 5.01% of outstanding shares as of the end of the year of 2009.
So, Professor, is the defense that I didn't do it on purpose, it was an accident, does that constitute a waiver of the obligation to file the 13Gs?
It doesn't. So I even have a quote from the director of the SEC's Division of Enforcement back in 2000, in the 2010s sometime. He mentions officers, directors, major shareholders, and issuers should all take note. Inadvertence is no defense to filing violations, and we will vigorously police these sorts of violations through streamlined actions. Let's see, what else did he say? The reporting requirements, he's speaking specifically about the 13G requirement. The reporting requirements in the federal securities laws are not mere suggestions. They are legal obligations that must be obeyed. Those who fail to do so run the risk of facing an SEC enforcement action. So he couldn't have made this any more clear that this is not something that, even if it's through an inadvertent, through no efforts of your own, you ended up with above 5%, you still have to file. And so in Q4 of 2009, they had 5.01%. They hit the end of the year. That means that they were required to file for that year. And then they also had to they didn't change their shares in Q1 of 2010, but then they did bring it back down in Q2 of 2010, which then would have required them to file another 13G. And so these are two more instances of not filing. This time, just, I guess, not being careful enough. And as you said, RFM, so it doesn't matter if this was accidental. And there's another quote here: the absence of an intent to acquire in excess of 5% is not a consideration with respect to the applicability of sections 13D and 13G. 13D is similar. It just means that you have intent to influence the company.
This is going to seem like a silly question, but I'm going to ask it anyway, Professor. Why is the church, I mean, trying to give them a pass maybe on this one that's accidental, even though the SEC isn't going to, but on the ones that are clearly flagrant, the first ones with the pipeline company, why is the church not simply filing their 13Gs as they're obligated to do?
Your guess is as good as mine, RFM. I mean, I think the church has two goals in mind. One is to grow through membership and through wealth. And the second one is to control the narrative surrounding their history, surrounding their finances, surrounding their intent. And I think that because of that, they feel as though they need to be very secretive about what they do. And I think that they sort of feel like they're above the law in a lot of these situations. They know that it's the law and they feel like they're above it. But I mean, I'm not a psychologist. I don't know. What do you think, RFM?
Well, I'm just wondering, because as I'm understanding it, this is the first time that any company associated with the Ensign Peak, and that's Whitney, is filing a 13F form. It's at the last quarter of 2002. The 13F form shows they had, what was it, 6.5% of this pipeline company? So presumably it would be readily ascertainable that they have more than 5% in this one company, since they're filing a 13F, which discloses that, and which I think is where Widow's Peak got the information from in the first place. So why not file a 13G?
I think you're right, RFM. It seems as though by filing the 13Gs, they wouldn't have increased really the visibility or risk that they would have gotten caught with their hands in the cookie jar doing this. It almost seems like they could have filed this, and unless the whistleblower comes forward on the 13Fs, this would have never been located one way or the other.
Yeah, right.
It's possible.
It is a company. I'm reminding myself. I'm sorry. That this is a company, Whitney, which is supposed to be by itself. It's floating out there. It's its own company. It's not a shell company as far as what the church wants to project to the government and the SEC itself. But yeah, so maybe that just increases my confusion as to why they didn't just have Whitney file a 13G, unless Whitney doesn't know what they're doing. I mean, Whitney doesn't even exist. It's being run by the honchos at Ensign Peak, right?
With plain names and no social media presence.
Yeah, I mean, I think that they didn't want to draw undue attention to themselves, right? And so by filing a 13G, you're just sort of shining another spotlight on yourself. Back then, if you look back at the filings before, they weren't in like a machine readable format the way that they are today, where somebody could just kind of grab onto it. And so, for example, they wouldn't be able to just it wouldn't be easy to go through Whitney's 13F filing and scour it and find that they owned more than 5% of one company, right? Otherwise, I think maybe that would have happened. I think Whitney would have said, well, the SEC is going to see right away that we were supposed to file a 13G with this. And so I wonder if, we think about like the fact that like, well, why did they create a second shell company? Because they were a little bit worried that their size was getting too large, that somebody was going to catch on. And I wonder if maybe the 13G was another form of just sort of saying, hi, we're here, and people kind of catch on and they start to notice them a little bit more. So they just didn't even want to be noticed, even as Whitney, because there might be some loose connection that they end up getting tied to the church.
Yeah, I think it's clear that the church is trying to fly under the radar as far as its finances go.
Mm-hmm.
Are you done with this slide?
Yeah, thanks. So, I mean, I think one of the things that's really clear here, and if we could go through why, but to a greater extent, but Ensign Peak filed 2 Schedule 13Gs in its own name in 2009. Now, this is what was really strange. Those 13G filings related to a large stake in a company called Rio Vista Energy. And Ensign Peak's stake in Rio Vista was indirectly acquired because they made that investment through a third-party manager. The 13G filings for Rio Vista in 2009 show us that Ensign Peak knew what a 13G was. They knew that they had to file it because they owned a certain amount. And so basically by seeing that they were willing to do it in some cases, we're seeing that they knowledgeably and I guess nefariously decided not to file in those other cases where they were required to file. The reason why they filed, and I don't remember if I talked to some members of Widow's Might on this in terms of if they have any insight, but the fact that it was indirectly acquired by a third-party manager might have made Ensign Peak feel as though they needed to file the 13G because somebody else, some other party, knew that Ensign Peak had it, right? And so they didn't want to be called out by this other party and get an SEC investigation going. So they said, oh, well, let's do this one on the up and up.
Can you clarify something for me, Professor? Which is this. I had thought that the first time that Ensign Peak filed a 13F in its own name was relatively recently, like 2002. Isn't that correct?
Yes.
Or I'm sorry, not 2002.
2020.
2020.
Yes.
Right? I got my 0 and my 2 mixed up there at the end. I'm dyslexic.
Yeah.
So if that's correct, that the first time they filed a 13F in its own name was 2020.
Mm-hmm.
Are you saying that they filed 2 13Gs in their own name back in 2009?
Yep, that's true. So Ensign Peak still existed as an entity, but they were pretending to exist as an entity that didn't have over 100 million in U.S. securities.
Oh, wow. Huh. So I'm guessing that whatever this percentage they had in Rio Vista Energy was less than $100 million.
Right. Yeah.
Because otherwise it would have signaled that they had to file a 13F.
Yeah, that would have been a problem. Yeah.
So they actually filed 2 13Gs in their own name in 2009 and never filed a 13F in their own name until 2020.
And I'd like to ask, and I can't remember what caused Widow's Might to catch on to this, but if you go to the SEC website and you look up their Ensign Peak's prior filings, it does look kind of weird. It looks like here's their 13F in 2020, here's their next 13F in Q2 of 2020. And then if you just go back a little bit, all of a sudden it goes back like 11 years, and there are 2 13Gs in 2009. So it is a little odd. And I wonder if maybe that was what led Widow's Might down this trail.
Okay.
Okay. In 2014, this gets kind of interesting. In 2014, Ensign Peak acquired 6.7% of a company called Dorman Products. And the intent behind that is likely just to trade to profit from stock volatility in that moment. But the shares were sold prior to year end, so there was no 13G violation. But Ensign Peak, what's interesting about this is they used 3 different shell companies for the trade, so that none of them owned more than 5% individually, even though Ensign Peak collectively owned more than 5%. What that means is that what the market should have been able to see was that the church owned more than 5%, and instead the market was deprived of that information. And this is called stock parking, I believe, or it's a form of parking, which basically oftentimes what stock parking is in order to gain more influence in a company, I'll sell some of my shares to you momentarily right now with the under the table understanding that I'm going to get them back later. And so it seems as though I only own 4%, but really I'm sort of collecting shares behind the scenes without the market knowing it. And I have de facto control, or I have de facto influence over the company. And before anybody knows about it, suddenly I have a bunch of stock. This is another form of that, where you're essentially you're parking your stocks in other locations. In this case, they're parking their shares of a certain company in these shell companies. And so you can't see as a market participant that there's one player that owns 6.7% of Dorman products. So it's interesting that the church was doing this, because the whole reason for the 13G is to sort of prevent this type of activity from happening. So it's
And
not
that
as
was
though that this is like victimless crime or anything like this. Like, the market needs to know this kind of stuff.
And that was held between the three stock shell companies called Tiverton, Green Valley, and Riverhead.
Right. None of them being in Utah.
Oh, right, exactly. So let me ask you this, though. So what I'm understanding is that because all three of these companies together had over 5% share of stock in Dorman products, and they had it only in the third quarter of 2014, and not in the quarter before or after. So they didn't have it in the fourth quarter of 2014. Therefore, they did not have an obligation to file a 13G in this instance. Is that right?
Correct. That rule has recently changed. So now it's at the end of any quarter that you would have to file the 13G. But yeah, they wouldn't have had to file it in this case.
So, but this is really illustrative, not of a violation of 13G, but potentially showing stock parking, as you've described it, which is having different amounts in different shell companies that individually don't arise above 5%, but collectively do and did.
Right, because you think about the fact that, like, what if the company was selling these shares? They might not want large block holders within their shareholder base, and so they might have inadvertently been giving the market may have inadvertently be giving 6.7% of ownership to one company without realizing it, without wanting to, and that's a problem.
Yeah, I'm thinking if I wanted to get controlling ownership in a stock with these millions of dollars I have sitting in the bank account not doing anything, but if I wanted to do that, and I wouldn't be able to do it if they knew I was doing this, then I could set up a bunch of different shell companies, and each of them grab a portion of that until I have 51% among them all. And now I have controlling share in the company.
Exactly. Yep, that's kind of what's going on here. I mean, it's to a lesser extent, right? It's not
Right.
They aren't controlling the company, but yeah.
Right. I was just trying to do it as an illustration that made sense to me.
Yeah.
You could see why the reports are needed, because it prevents somebody from doing something like that.
Correct. Yeah.
Yeah.
All right.
All right. And so for a lot of its stock holdings, for most of its stock holdings, Ensign Peak has favored large stocks, which has made it so that it's easy to kind of stay below that 5% threshold.
So large stocks, I mean stocks in large companies.
Correct. Like like Apple or whatever. I think they own like 0.1% of Apple or something like that. And so it's not even close to 5%. But for some stocks that apparently the church found interesting enough to own a significant portion in, they kept it just below that 5% threshold in order to avoid this 13G filing. And so if you look at, for example, it's hard to see it here. Let me look it up on my screen here. But so Whitney owned 4% of a company called Snap-on, just under 5%. If you rounded it up, it would go to 5% of a company called Pediatrics. Argyle, which is another shell company, owned IPC Healthcare in 2010, just under 5%. ITT Education Services, some of you will remember those commercials, of just under 5% in 2011. Healthcare Services Group in 2011 of just under 5%. Air Methods, Strategic Education. And then there were some where, they're like Knight Swift or Pluralsight, those were two companies in 2018 and 2019. And it's interesting because this is a timeline, but as time went on, they started to become more complex in the way they did this. If you look at like before, it was just one shell company owned just under 5%. And then once you kind of hit 2018, 2019, collectively, they still owned under 5%, but then they also split that amount across their different shell companies. And so, for example, Pluralsight owned, just under 4%. The church owned just under 4% of Pluralsight in 2019, and they split that proportionally up across 6 different shell companies.
Does that change in administration or calculation or holding of these shares in around 2018? Does that correspond in any way to the first public whistle that was blown about this? There was a point at which I'm sorry, I'm going from recollection, but I think there was a point at which something was made public, somebody blew the whistle, and the response from this is when 2 of the managers resigned, but they found 2 other people to plug in their spot, apparently no problem. And they decided that instead of coming clean and starting to do things right, they decided to double down and try and make it more difficult to be found out.
Yeah, so I think that happened in 2017, and so it would come right around that time. And you can see that they're sort of covering their bases with a multi-pronged approach here, right? So they're staying under the 5%, but then they're also splitting it up. So let's say that, that accidental thing happens again where they accidentally go over 5%.
Right.
Well, it won't look like that because even if collectively they do go over 5%, it won't look like that because they're split across 6 different companies.
Because they are getting close on these companies to the 5% mark.
Right.
And then I want to ask, is there, among all their investments in the market, is there enough of these that are close to 5% that you can look at this and go, this is intentional? We're not just cherry picking the 10 investments that are near 5%. There's a whole host of them that are 0% or 0.1 or 3% or 2%. Is there enough of them that are flirting with that 5% line that you can sort of see that this is intentional?
I don't know that you need there are enough, but I think the real key there is to look at the discontinuity right at the 5% mark. So if you see that the church suddenly doesn't own anything once you cross that threshold of 5%, there's only one reason why you would be really willing to own a bunch of companies at 4.999% and 0 companies right over that small threshold.
Yeah.
That tells you that there's something about that 5% threshold that they're avoiding. The only thing that seems reasonable is that they're avoiding this 13G filing. So I don't know that it's necessarily the amount of companies that they own, but just the fact that you look at the comparison across those 2 ends of the fence, those 2 sides of the fence, and you see that there's nothing on this side is very telling.
That is interesting. It's a great point that you raised there, Bill. So out of all of these, we know that back in 2009, Ensign Peak in its own name filed 2 13G filings, right? And it does strike me that if you go to 5.1%, I mean, it's not the end of the world. Nobody cares really. 5.5%, 6%. Does anybody really care? I think the only thing is that you've got to disclose it in the 13G. The world doesn't come to an end. Business goes on as usual. However, what you've done is you have now disclosed that you own more than 5% of stock in a certain company. And that's apparently why the church wanted to keep it below 5%, even if it was just barely below 5% and never over.
Yeah. So from an operational level, it doesn't, like you said, RFM, doesn't make a difference. From a market participant level, it doesn't really make a difference whether a shareholder owns 4.999 or 5.0001. And so it's sort of a function of this bright line rule that the SEC created that created this incentive for the church to just come right under that threshold. And we've seen, there are lots of instances of companies trying to stay under certain thresholds for reporting and things like that. This is a perfect example of that.
So this suggests a widespread or widely disseminated policy within Ensign Peak.
Absolutely. Yeah.
Keep it below 5%, guys.
So, like the 13F violations, 13G violations are rare. They're not as rare. So there were only like 3 13F violations in the history of 13
Right.
filings. 13G violations, just as an example, in 2014, the SEC went after 28 at the same time. They did a sort of a wide net sort of approach and tried to catch as many people as they could, and they found 28, and they went after all of them all in one enforcement order. So that's just an example that it's still a very small number, only 28 people. Most of them were based on, maybe larger companies where their employees failed to act on a timely basis. So it wasn't that they were even not filing, it was just that they weren't filing within the 45-day timeline. And the SEC wanted to just crack down on this and say, look, this is not a joke. We need you to file the way that you're supposed to file. And so the fact that there are only a small number of these and doesn't necessarily make it so the fact that the Ensign Peak only had a small number of these doesn't mean that it's not a serious issue. And the fact that the SEC has only gone after a few people about this doesn't mean that it's a minor issue to the SEC either. The SEC has come out and said this is a really big deal to us.
Do we know if the 13F or 13G violations, if those are sort of considered equal in terms of the significance of violating the law? Like, is it worse to break one than the other? Is the penalties tend to be worse for one than the other?
Well, I'll give you an idea of like it's just hard to compare because the sample size of 13F violations is so small that it's just hard to tell if it's because they don't take it seriously or if it's just because nobody really violates 13F compared to 13G. But for example, 33 out of 34 individuals in 2014 that were named agreed to settle, and they paid a total of $2.6 million. So 33 people paying $2.6 million in fines to the SEC.
It's less than 100,000 each.
Less than 100,000 each. Some of them, a lot of them were, there was one or two that were around 120, 150,000. $75,000 penalties were pretty common, $68,000, $66,000 penalties. But again, they don't necessarily show this sort of nefarious, purposeful obfuscation that the church has shown.
Well, right. I'm imagining that the reason the SEC were able to identify these guys, and these are the ones we're going to crack down on, is because these are the ones who confessed in their late filings. They drew the attention to themselves. They said, we're late, but we're trying to comply with the law. And they say, we're going to crack down on these, and we know right where to start, the people who've already identified themselves. So that saves them from the SEC of having to go through all of these 13Fs and try and do the calculations with every freaking company that's listed in there as to whether at the time this was over 5%.
Yeah, exactly. So this is these are low-hanging fruit sort of people. And you can kind of see this happening with the 13F fine. The prior 13F violations were more about ignorance or just a failure to file. Nothing like 20 years of obfuscation and creating shell companies and all of that. And that's why when you look at the other 13F filings that weren't levied against the church, they were only for like $15,000 or something like that, right? Mm-hmm. So whereas the church was fined $5 million. And so it wouldn't be surprising to me if the SEC decided to go after the church for this. It wouldn't be surprising for me at all to see that that the fine would be in the millions.
It is,
as opposed to 100,000.
I just want to note to the audience, the church was fined $5 million, right? $4 million to Ensign Peak and $1 million to the church. Mm-hmm. And you go, that's a lot of money for you or me, but it's not a lot of money for an entity that has $265 billion in total, right? And you can see the conversation. Again, I don't know what happened behind the scenes, but it would occur to me that behind the scenes, the conversation is, hey guys, if we get caught, what's the worst thing that could happen? And they say, well, the fines are in this neighborhood. We could probably expect to see XYZ. And let's just say they named it $5 million. The church by hiding all of this, by being able to invest in shell companies and split all this money up and do all the things they did and leave people in the church thinking the church was a poor church. We're not a wealthy church, is their exact words, right? When
Yeah.
they are really one of the wealthiest churches or entities or companies in the entire world. It occurs to me that they made way more than $5 million by cheating, by being dishonest, by being deceptive, by not filing the reports. You can see why, again, forget ethics and rules and law. You can see when you don't make a big penalty, when you don't really get somebody for what they did, you really almost make it productive for them to cheat the system.
Yeah.
Yeah.
Cost benefit analysis.
Yeah.
Yeah.
Spencer, is Bill's question any more complicated than asking the question, over the period of 20 years, did the church save $5 million in people paying tithing who would not otherwise have paid tithing if they knew how much the church had? And if indeed, so what is that? That's $250,000 a year. So if the church saves, if there were people out there who, if they knew how much the church had, would have not paid tithing to the tune of $250,000 is all a year.
That's not much.
Okay.
Yeah. And just ignore inflation too here.
Oh,
But
good
yeah,
point.
you wouldn't. Yeah, but you wouldn't. Absolutely, 100%.
Then it was
Just
smart
an
business move
interest.
for them.
Yeah. It was a very, very smart business move. Now, whether the church knew that up front,
Yeah.
I guess there was evidence of the SEC maybe not engaging in enforcement. I think that they thought they could get away with it. I think
Yeah,
that there was
they
a
always do.
significant chance that they thought that they could get away with it.
They always do. Trust me.
So, there was also, this factored into the probability, this calculation was also this idea of like, well, we might not have to pay anything ever.
Right.
And we get all the benefit and none of the cost. I guess just to kind of push back a little bit, there is a greater cost than $5 million to all of this, right?
Mhm.
So like the loss of faith, the loss of membership, the loss of future tithing, a lot of that loss has nothing to do with the church being wealthy. It's the fact that the church hid the information and decided to lie. And I think that there is a specific cost to that.
There are costs
Maybe
associated with that. They're harder to put a dollar figure on. Is it fair to say that over the course of 20 years, the church, through doing this, even though it lost $5 million toward the end of this time period in fees or fines, I should say, to the SEC, that during the process they made themselves independently wealthy?
Sure. Yeah. Yeah. So even including all of that probably in the calculation, the church probably came out on top, at least in financial wealth.
Yeah. So at this point, what do they care about members not paying tithing? I know they do as a religious or principled concern, but really the church doesn't need their tithing anymore. I think that Elder Bednar said as much at what was it, the National Press Club last year?
Mm-hmm. Yeah.
The church doesn't need your tithing.
And this is why, you're making a great point, because if you're a faithful member, this is why, please, if you're a faithful member, you should advocate for financial transparency within the church. Because what's happening is you're trading souls. If you're from a faithful perspective, you're trading people's testimonies for wealth, for financial wealth. So just be financially transparent, right? Take out the stumbling block from the leadership, and help them create an accountability mechanism where there's some monitoring and some monitoring mechanism where the church feels as though they need to be more Christ-like and they need to act like a Christ-like organization. The worst that can happen from that is that, well, the best thing that can happen from that, I guess I should focus on the positive, is that people will feel as though the church is a Christ-like organization, and people will feel as though they can trust the church because they're being transparent. They won't lose their faith to the same extent.
So is it fair to say, Professor, that as a result of this entire fiasco with the SEC, that it demonstrates beyond a reasonable doubt that the church is more interested in dollars than it is in souls? It cares more about money than its members.
Yeah, I think it kind of did. Yeah. Well, I think it showed that it made that trade-off. Yeah.
It seems very mercenary.
Yeah.
Profits over ethics. Yeah.
Wow. Clip it and put it on TikTok.
Ta-da.
We're going to make you famous, Professor.
Creating TikTok shorts right in front of you.
That's Indiana University, Professor Spencer Anderson. Oh my gosh. Well,
I'm not in the business of putting in like assigning a value to souls. And so it's kind of a weird question.
Well, God is, and he's gone on record as saying that the worth of a soul is big. What did he say about that? Is it section 18 or 19 of the doc? Remember that the worth of souls is great in the sight of God. I think it's great.
Yeah, sight of God.
Yeah.
It's
but
just not as much as $1 billion.
That's right. It's not $150 billion sort
No,
of.
it's not worth that much.
That big.
There is a price. There is a price on soul.
$5 top.
Yeah.
The other thing that occurs to me, it's this issue times 1,000 other issues, but the church has this way of doing things where it's hidden everything. It's been dishonest about its history. It's, been dishonest and deceptive and withholding about its finances, sort of out of the fear of what would happen. And then what you realize is that you can, the church can come forward and put out the gospel topic essays. Yeah, it nicks people a little bit. Some people leave. It cheats and gets caught by the SEC and it pays a fine. And, it has to issue carefully worded denials and say this and say that. But at the end of the day, it could almost just tell the truth and do the right thing. And I think its fear of how much it would be impacted doesn't actually equal how much it would be impacted. Believers generally don't care. They will come up with reasons to continue to believe. It wouldn't matter if President Nelson was caught, dinkling little kids in the cultural hall. They would still figure out a way to go, well, that's my prophet and who cares? And Mormons seem to have a way to just justify anything and move on. Anyway, all right, there's my rant.
I don't know if I agree with the dinkling part, but I do think that I do generally agree, because how many members do you think have actually gone onto the SEC website and accessed the church's 13F filings?
The matter's closed. Why would they?
One too many is how many?
Yeah, I guess so.
But afterward,
But
afterward, the matter was closed. Nobody cares. Move on. What's next?
Yeah, indeed. How many subsections are there in the statute? How far does it go? We'll see. 13G, 13H, 13I.
There's no 13H as far as I'm aware, but yeah, we're just going through the alphabet.
Yeah, absolutely. If there's a law out there, we'll break it. That's our motto. The glory of God is breaking the law.
Yeah, and it is.
By the way, Spencer, I think that what Bill was talking about, President Nelson, did you say dinkling? What was the verb you used?
Yeah, I don't know. I use dinkling, but there's whatever.
Okay. We'll use his for dinkling little kids in the foyer. And they'd still come up with a way. Well, you see, this is what the followers of Warren Jeffs. I mean, the guy got convicted and sent to freaking prison for child rape, and he still got his followers.
Yeah,
making excuses. I mean, he said, "I'm not a prophet." I mean, what more evidence can you have that a guy's not a prophet than that the guy himself says, "I'm not a prophet"? They don't.
He was
believe
speaking
him.
as a man when he said he wasn't a prophet.
Exactly.
So got to hold out for him to speak as a prophet at some point.
Yes.
Kind of like Joseph F. Smith at the Reed Smoot hearings.
Right. Sure. It's this kind of religious belief that we're going to believe what we're going to believe because our testimony is so deep that even if you, the person that we believe is the prophet, say you're not the prophet, we're still going to believe it anyway.
Yeah.
Regardless of the dinkling of little kids in the foyer.
Okay.
Okay. So I'm going to say that enough tonight so we get it added to the dictionary.
Correct. Yeah.
All right. So were there any more slides in that, or was it just footnotes after that?
There was just questions about this evidence and what does this mean? So like why, and we've asked these questions, like why did Ensign Peak's management decide not to comply in the first place? During its investigation with the SEC, during the SEC investigation about 13F filings, did the SEC ask about it? And why didn't the church just bring it up, right? And then were the head church leaders made aware of the 13G obligations? And were they aware that they were also failing to comply with this regulation, in addition to the 13F violations that we already know that they knew about?
At some point, they're breaking so many laws. I've got to give them some slack and say, how could they keep track of them all?
It does kind of feel as though, like, if this news was released on its own, it would be a really huge deal. But because we are already kind of, I don't know, desensitized to it, it doesn't feel as big of a deal. It doesn't. So
we do live in an age where where the believer almost expects that their leaders just will be hiding things and be cheating the system.
Right. And Spencer, to what you said, you know, you kill one person, it's a tragedy. You kill 1,000 people, it's a statistic.
Is that Shakespearean? Is that a
No,
Shakespeare quote?
I don't think so.
This is really good.
Somebody said it was probably 1 million people, but whatever it is, you get the idea, right?
Yeah.
Kill one person, 2 people. I mean, it's a tragedy. It's horrible. People pay attention, but you kill 1 million, nobody cares.
Yeah.
I mean, look at Ukraine right now.
Yes, it's happening right now.
Yeah.
I do want to ask you, Spencer, I've talked to RFM a couple times about this. The widow's mite doesn't take on the responsibility to actually notify the government and report that the law has been broken. They are just shining a light on it, and then they step back and leave it for whoever to actually take the information and attempt to get the church penalized for it, correct?
No, in this instance, Widow's Mite did submit to the SEC this information. So the SEC knows about this.
Yeah.
Now, you never find out, like, necessarily. You send out a thing to the SEC, you report it to the SEC, you might never find out what came of that. There's no obligation for the SEC to respond to you specifically about this issue. And so maybe
Kind of
we'll
like
find
if you're
out someday.
Yeah, just if you're a person walking along and you see a crime being committed and you call 911, yeah, they have no obligation to keep you apprised of what's going on with the investigation.
Yes, exactly. Yep. Yeah.
Might get called as a witness if it went to trial, but other than that. Okay, so is that the end of this slide? Because I know I'm expecting, I should say, I know we have the lines open. I'm expecting we have some people calling with some comments and questions for you, Professor.
Okay.
Only Bill knows for sure.
Yeah, we've got one in the phone bank at the moment. I'm sure we'll have a few more soon, so we'll go to that one. Let me, I believe this is Ted. Ted, are you on the line?
Yes, sir, I am.
All right, you're on Mormonism Live with Spencer Anderson, RFM, and myself. Go ahead.
Yes, sir. I gotta just get to my TV and turn the volume off. Yes. So, anytime that I hear Spencer, I need to call. Like, I love that guy, and I didn't even know he was a professor until today. But yeah. So I have a big question for him, and I just wanted to say, because I make my buddy. So all my friends are pretty much Roman Catholic, and I make them listen to it, and I always make them listen to the intro. And thank you, Bill, for doing that intro. It's like Rocky for me, you know, like to get them going. And also, RFM, I'm really glad that you wore a Marvel shirt today, and I couldn't tell what it was until you took a sip of your Diet Coke, or maybe it was Coors Light, I don't know. But anyways, yeah. So, Professor, I just want to know, sir. One of the things that gets probably most of us, like, I don't call myself an anti-Mormon anymore. I call myself like a truth teller, or there's truth and there's lies. And I just want to know, sir, why did they not give them more than a $5 million fine? Like, that just seems like a slap in the face to me. And I just think that powers that be should have held their ground and given them more of a fine than that. And I just would like to know why they didn't.
I think they should have taken more of the tithe payers' money. What do you think, Professor?
No, I 100% agree. Thanks for the kind words too. That's really nice. Yeah, I agree with you completely. It bothers me that the SEC didn't hold their feet to the fire a little more. I don't know if it's because it's a religion. They sort of get, kid gloves put on when it comes to religion and how they're handled with the regulatory agencies. I don't know what the deal was. I don't know why. The church has some really good lawyers. There might have been some negotiations that went on that maybe that helped. I wish I could be in the room to kind of figure that out, but it bothers me a lot. To Bill's point, it changed. It made it so the equation was easy for them from an economics perspective to just to go forward with this scheme, because they knew that the fine wouldn't be potentially because the fine, it came to fruition that was what happened, right? That the fine ended up not being anywhere near what they ended up gaining from hiding all of this information. And it's like a really rich person getting pulled over for speeding and getting a $50 speeding ticket, and they don't really care, and they're just going to go and speed the next day anyway. So it doesn't really have a good preventative mechanism built into that.
It seems like
it's telling everybody that they can go and do that too.
It seems like if you really want to deter the crime, you have to come up with a penalty that takes into account how much they made off breaking the rule. And hence, if they broke the rule and made an extra $1 billion, which I don't think is crazy, then penalize them $2 billion. And then all of a sudden, everyone's going to make sure they file their forms.
Right. When I brought up the tithing dollars, I think I was talking with somebody else other than you, Spencer, associated with Widow's Might. And he or she was talking about how the SEC is more reluctant to go after churches because they are taking money that was donated to them by the members. And so they're not just penalizing the institution, they're also penalizing the membership. Do you agree with that?
To some extent, but when you penalize a company, you're penalizing the shareholders, not the managers, right? So like it's sort of the same sort of idea. Like if I'm a shareholder of a company, I get screwed twice because one, the company's been lying to me. The managers have been lying or not doing what they were supposed to do. And then number two, I get fined for it and it comes out of my pocket.
Mm-hmm.
And so this is a common argument when it comes to the SEC. Like, how are you going to find them? Can you find the manager? Can you, instead of the company itself? So it would have been really interesting if they had fined Russell M. Nelson from his own personal wealth, from his own personal funds for doing this. If they had fined Roger Clark, the investment manager for Ensign Peak. That sometimes does happen by the SEC, and that would have been, I mean, I don't know. The church might have just said, all right, well, thanks for paying the fine. We'll go ahead and reimburse you.
Right, exactly.
But yeah,
And
it's hard.
The other thing, Ted, is I hear what you're saying. I think you're right. But also don't lose sight of the fact that this fine for simple 13F violations, and that's all it is 13F violations, is many, many, many times more than the next largest penalty assessed by the SEC against the company for purely 13F violations.
Yeah. Right.
And if David Nielsen is right too, the IRS could go after the church for FBAR violations.
Tell us about that. FUBAR or FBAR?
FBAR.
Okay.
It just means that if you own if you have ownership and investments of companies in other entities that are outside of the US, you have to file a form that reveals that to the IRS. You don't have to file it to the public, but you have to tell the IRS this information. Ensign Peak is not, they are not exempt from filing the FBAR, and the FBAR violation fines are very, very steep from what I've heard. Like we're talking billions and billions if the church were to get caught in that. So I don't know if the IRS is dragging their feet. There's obviously some political I don't know if it's obvious, but the IRS is in sort of political deep water when it comes to, in the last 10 years, it's gotten in trouble for targeting one political party or companies that were sort of affiliated with a political party. And they got a lot of their funding removed by the majority Republican Congress as a result of that, sort of as a punishment. And the IRS was definitely in the wrong in that element when they did that. The IRS might be hesitant to go after religion if they know that politicians will cut their budget, or politicians might bring them, subpoena them to come and talk, and saying, this is who you're going after. You're going after the religions now. Like, this is who you think the evildoers are in the world. And so you can see how, like, there's a little bit of a game that's played with the IRS, and they might just not want to touch it.
Yeah, that was back when Lois Lerner was the head of the IRS, right?
Right. Yep.
Yeah, I remember that. Not specifically, not all the details. I remember when it was happening. It was kind of a big deal.
Is your gut, Spencer? Again, it sounds like we just don't know. It's 50-50 maybe. But is your gut that the SEC will, within a year or two, something will happen where the church will be penalized for breaking these 13G violations? Or do you think the church is right and the matter is closed? It has influence, or the SEC sees it as part and parcel with its other thing, hence they just don't want to go into it and not going to punish them any further?
It kind of seems like there's egg on the face of the SEC if they didn't catch it the first time and they have to come back. But I will say that I think that the SEC could come after them a second time if the publicity gets to be large enough that people are like, come on, SEC, what are you doing? Right. So if this news were to hit the Wall Street Journal, to hit Yahoo Finance, to hit, and people started, in the investment community, felt as though there were players that were in this area that, like, were not being treated the same way.
Yeah,
that's not what the SEC would want to have as a perception. And so at that point, I could see the SEC stepping in.
because that is the flip side of Bill's argument, isn't it? That if the SEC does not go after the church for these violations when they do for non-church institutions, then is the church not being protected in its malfeasance by the people who are supposed to be enforcing it?
Mm-hmm.
Yeah. Okay. 2 more calls. So next one here, I believe, is Ralph. Ralph, are you there?
Yes, I am.
All right. You're on Mormonism Live, my friend.
Okay, great. I happen to be a bit of an investor myself, and I have, well over 100 companies that I invest in. And the S&P was up about 10% last quarter, and the Ensign Peak I had about 8.4%, and I was ahead about 5.6%. Of course, I have to live on my investments too. So, but I actually am interested in knowing how you feel about what the church really invests in. I actually go through the 13Fs and I look and see what they invest in. And of course, I'd like to have a higher standard for the church than what I might do. But they invest in companies like Church and Dwight, and they make condoms. And they also invest in Lockheed Martin, and they build fighter jets. And I'm just wondering how you people might feel about that.
I like both condoms and fighter jets.
I know.
Make love, not war, Bill.
I'm just thinking that what would the church think if members thought that they actually make those kind of things and then they invest in them?
Yeah, I would like to know if this is correlated with, so their vested interest in the war machine is correlated with their failure to speak up about the war on Gaza, right? Those types of things.
Mm-hmm.
Like, are they taking, when they make an investment stance, are they separating it from their doctrinal stance or their stance on social issues? Are these made by different people? Are they completely separate? Or are they related to each other? I feel like they should, in order to have internal consistency and integrity, they should be related to each other. So set aside whether you agree with war or Coca-Cola or condoms. At the very least, they should be internally consistent. That's what I would want to see as a first order concern. Yeah.
So Ralph, what do you invest in?
I invest in everything. So I would invest in these companies that make war machines as well, and condoms, and I invest in a lot of other just general things that do very well. Because I just want to make sure that I'm into everything. Like I invest in tobacco and coffee companies as well. Some Sunday school teacher made the mistake of saying the people that market this stuff are laughing all the way to the bank, and now I am as well. So.
Okay. So
yeah,
I don't really have the full consistency.
No, I think it's odd because there are a lot of companies that invest in sin stocks, right? So you invest in Budweiser or adult entertainment companies.
I'm sorry, what? Adult entertainment companies?
Adult entertainment.
I heard it as gold entertainment. That's why I wanted.
Oh yeah. Sorry, casinos and things like that. And oftentimes there's been research that has shown that those stocks tend to get higher abnormal returns on their investment because there are enough people that avoid those stocks. It's not a guarantee. I think this is not investment advice to anyone. So you can see that that's where
I'll go out and invest in adult entertainment.
Yeah, no, that's not what I'm saying. The thing is here though is that that's a perfect example. That's a perfect instance in which the church gets to decide what they're all about. This is where they get to decide if they're going to, follow God or mammon, that kind of thing.
Spencer, what do you do when no one else is looking?
Yeah, right.
Doesn't that determine who you really are? Haven't we heard that message before from the church?
Yeah.
What do you invest in when no one is looking? What do you invest in when you're hiding it from the government?
You invest in Philip Morris if you're the church when no one's looking. So.
And they did, didn't they?
They did, yeah, in 2010.
Yeah, and all it takes, it's not that we're suggesting they sit around in the meeting and go, invest in condoms, invest in fighter jets, invest, that's not what's happening. But what you could do, what could be done is, hey, we're the Lord's true church. These are our values. Ensign Peak, invest the money wisely, but don't invest in anything that doesn't align with our values. And then Ensign Peak would obviously follow that.
I'm sorry. The only reason I'm laughing at that, Bill, is because by this point, I think we've already established that the church cares about money more than it cares about anything else in the world.
Amen.
Including the souls of its members. So that's why I'm laughing, because of course, if they had a moral compass, they would be doing that. But if they had a moral compass, they wouldn't have been fined $5 million by the SEC.
Right.
Yeah.
Yeah. So is that it for Ralph? Ralph, thanks for calling.
Yep, he's gone. And so our next caller, last call of the night, is Jeff. And Jeff, I think, wants to tell us something about his dad.
His dad, okay.
Go ahead, Jeff.
Yeah. Yeah, am I here?
Yeah, you're on.
Hello.
Hello? All right, sweet. Hey, everybody. Yeah, so through my work, I have access to some business listing data. And I was perusing that business listing data a few weeks ago. And one thing I found interesting was all these, a lot of times over a dozen companies listed as tenants of individual meeting houses. So you go and look at a meeting house of the company, which obviously could be listed as, one of hundreds of different names. We know this already, but the tenants of meeting houses I hadn't noticed before. So I thought that was interesting. So just wanted to bring that up. I didn't know if Spencer had any input on that. Just one thing I hadn't really heard talked about in all these financial talks. But in doing that, the interesting thing I wanted to ask about is that what I was actually looking for is I owned a company a long time ago, and I went to see just kind of randomly if it was still listed at my parents' house. It's not, but what I found is that my dad was at one point the president of one of the local choirs. I'm being careful with how much information I give here, but just he was president of one of the local choirs, and he is now listed as the primary owner and contact, and his home address is the business address for that business. The choir is listed as a business, classified as a scientific. I can't remember the exact code for it, but anyway, so I thought that was kind of a red flag. I thought it was really weird. Like, one, I don't know if he knows that. Does he even know that he's listed as the owner? And then two, like, if he does, is there anything for him to be worried about? Like, I just don't know at what point, like, if things hit the fan, so to speak, could anything potentially come his way from that?
Have you not told your dad
weird.
about this, Jeff?
I have not. It just seems like a can of worms,
Is there some kind of rift in the relationship that you haven't?
I still tread lightly with that,
Yeah. Okay. Well, I don't want to get into personal stuff. It's just a question that immediately comes to mind. You find out that your dad might be in a situation that he doesn't know about, could be adverse to him, but you haven't told him yet. Hey, Spencer, did you understand what Jeff was saying? Because a lot of it was Greek to me.
Is the business you're talking about, is this a business that he does legitimately own? And is it a church related business? When you say you're trying to be careful, is this like related to the church, or is this a separate thing?
Oh yeah. It's a church business. It's I don't want to say which specific choir, but it's the local choir, the local Mormon choir of blank, Oh,
it's the LDS Church.
So oh yeah.
They made a company out of a state choir or a ward choir.
Might not be a ward choir.
Yeah.
Is it the Mormon Tabernacle Choir?
It's not.
No?
It's not. It's bigger than a ward. It's like a regional choir. Yeah.
Okay.
Well, I mean, I expect that they go places and put on concerts, and you might want to have an ability to deduct those things, right?
Expensive.
Yeah,
The choir president.
Yeah, I don't know. I don't have an answer to your question because I don't know, like, if sometimes the choirs, they like have to purchase like music at a discounted rate or things like that, and so they need assets, and so maybe they would want to incorporate in some way. But why they would do that separate from like the stake itself is a weird issue. And so, like, if he was normally, if you're going to create your own business, you're going to be listed as the president of the business, you need to be the one that signs it, right? And so I don't think that you can just be signed up as like a business owner of a business you've never heard of or knew that you were a part of. So I don't know. Yeah, it's weird.
Yeah, but RFM for sure. Kind of odd that the choir is registered as a separate entity business, right?
It is. I think you should call Salt Lake and rat your dad out.
You have that number?
Oh, absolutely. It's 1-800-CAL-LGOD.
That was good. That was the right number of letters too.
Amazing, isn't it?
Thank you.
All right.
Well, yeah. Step one, combo with old dad. See what's up there. Make sure he knows what's up, because this is a $100,000 a year sales business. So I'm like, hey, that's not not nothing there. So
they're not close to those 13Fs.
How much sales? Wait a second. You just got
Spencer there.
How much?
Yeah, that's their estimated annual sales is $100,000.
And you found this out by looking at their Form 990 or what?
No,
is it a
It
nonprofit?
wasn't. Didn't appear to be a nonprofit. No.
Okay.
It looks like a straight up business listing. Yeah.
It sounds like one of those Utah County schemes. Is it an MLM?
Dallin Oaks' daughter doesn't go around playing instruments for nothing. You know what I mean? Like there's some money to be made in LDS musicians and choirs. So,
well, that's the whole thing there too. Like, I find it very interesting as the choir director. They're trying to get in those guest artists all the time, but at some point he was told, "Oh, there's no more money to have these guest artists come in." Meanwhile, I don't think they're aware of how many billions of dollars the church has that could be probably okay with, affording a few guest artists here and there.
Right. Well, thank you, Jeff. Thanks for the call.
Let your dad know I'm willing to be a guest artist.
Yeah.
Admittedly, $50,000.
Amiga.
Yeah, he's got the money.
50,000.
I'll bring in twice that.
Got it.
It's okay.
Thank you, Jeff.
Sounds great.
Bye.
Yeah. I will say this about Jeff's call. Who knows whether the church is doing something wrong there? What I will say is that the church, on really serious things like filing federal forms that it's supposed to and not trying to hide its total conglomerate of wealth, does so, which indicates that it has the predisposition to do that in other places too, if it's advantageous to the church to do so. And it seems reasonable that in any place where the church could finagle things and benefit, that they've already shown the ethics to finagle things and benefit.
And I think sometimes the members actually do what the leaders suggest and they follow the prophet.
Yeah. Follow the prophet. Yes. So anyway, that's all I've got.
Spencer, do you have anything else you want to add before we close tonight's show? I think we are out of callers, correct, Bill?
Yep. All done.
Ted, Ralph, and Jeff, thank you so much for calling in. Spencer, closing word goes to you.
I mean, I don't know. This is an ethical issue too, right? So it's not just a legal issue, it's an ethical issue. What Bill said really kind of stuck with me because he's, this is doctrinal, that the church is willing to kind of do what it's needed to be done. The ends justify the means. It's in the Book of Mormon, killing Laban in order to, save, however many people from not having belief. Like, this is just another example of killing Laban.
Mm-hmm.
What ends, what kind of laws are you willing to break in order to make sure that people don't perish in unbelief? And that's the justification that was given for hiding all of this information. I have a friend who is an accounting professor, who is a believing member of the church, who argues that they don't care about the transparency of the church because these issues aren't big enough for them. It wouldn't cause them to make a difference in terms of like whether they would pay tithing or not, because they feel as though they're already just having faith and giving it to God rather than the organization. And the fact that the church isn't doing anything really big or problematic means that they don't have to be transparent. I just want to point out that the potential flaw in that argument, if you're a faithful member, is that you don't know whether there are bigger things that are going on behind the scenes. You didn't know that there were federal laws being violated with the SEC before. And why didn't you know? Because the church wasn't transparent. So I'm not saying that there are bigger and worse things that are going on behind the scenes with the church. I'm saying we can't know because it's an unobservable data point, because the church is not transparent. So you have to first demand transparency from the church. And then if there's nothing going on, that is the ideal situation. And transparency allows the church to signal its type. It gets to signal that it is a good actor in the world. It's a win-win. If you have transparency and the church is doing good things and only good things, that's not an argument against transparency. That just means that we all get to see that the church is good.
Mm-hmm.
And so if you're a faithful member of the church, I don't understand. I think that if you look back at like disclosure theory, just typical disclosure theory from all the way back in the 1970s, the idea here is that transparency allows the church to show its goodness, and it gets to prevent it from doing the bad things that it might be doing. It gets to prevent bad things from happening. There's nothing, I can't think of anything really negative that would come, at least nothing materially negative that would come from transparency. So I hope that, I don't know how many faithful members are listening, but I hope that people understand the argument for transparency is in their best interest. It's in the prophet's best interest. It's in the members' best interest. It is not trying to get the church to look bad. It's trying to, it will be better in the long run for the church. If you are a faithful, active member that wants the church to do good, you should want the church to be transparent. That's all.
Thank you. And your friend, if you could pass along the message from me, from Radio Free Mormon, to your friend who may or may not be watching the show, I don't know. I find his position difficult to accept because what he is advocating is to accept the word and the word only of people who already have a track record of lying about the very same issue, finances.
Mm-hmm.
Amen.
Yeah. Yep.
All right. Well, thanks for that final word. Bill, do you have anything else that you want to say before we close out the show tonight?
No, when you get finished, I'll put the donor plea video up, and then we'll have the closing outro.
Okay, super. I'm looking forward to that donor plea video. That's my favorite part of the show.
All right, great.
Is this one that you do?
This is the one, where I'm just letting donors know, or folks know, that they can support the program, and we can keep being a beacon of light on shining the truth on things like this.
Okay, great. All right. Well, everybody, before that donor plea video goes up, please watch it to the end. Please heed the admonitions contained therein. And it's been a great show tonight. Thanks once again, Professor Anderson, for joining us. Thanks, Bill. Thanks, Maven, for everything, making the show run as smoothly as it does. And to everybody else, thank you for watching. Please click like. Please click subscribe. Please share this with your family and friends and everybody else who needs to know this information. And that's a lot of people. And then join us next week, next Wednesday, for Mormonism Live, when we'll come to you again with another scintillating episode. We'll see you then. Bye-bye.
Hello, friends of Mormon Discussion Incorporated. I'm Bill Reel, founder and CEO, reaching out to our incredible community. Our mission is to support those examining the truth claims of Mormonism and those redefining their relationship with it. Our acclaimed lineup of podcasts, including Mormonism Live, Radio Free Mormon, Mormon Discussion, and others, offers a space for truth and healing. But we need your help. Your donations power our work, expanding our outreach, improving our content, and creating new initiatives. Visit mormondiscussions.org, click the donate button, and make a difference today. Donate to your favorite show, like this one, as your support empowers us to empower others. Thank you for being a part of the change. Together, we're making real impact.